These are tough times for charities, tough times for all of us, but for charities, it could be about to get a whole lot tougher. Professor Paul Palmer from Cass Business School says the sweet shop is closing. I asked him what he meant by that.
Well, for the last 15 years, the government has been the principal, if you like, driver of funding in the voluntary sector. If we look at the four sources of income of the voluntary sector, which is donations from the public, money from government, corporate donations, and investment income, where charities have their own investments which have been left to them. Investment income has basically followed the vagaries of the stock market. Corporate donations have actually virtually stood still. Public donations have stood still. But government income has effectively grown has grown from less than 30% to something like 40% of the total income of the voluntary sector. So government has been funding the voluntary sector to deliver welfare programmes, very, very generous. Clearly, with the expected, whoever wins the election, public expenditure cutbacks, this will obviously have an impact on the voluntary sector.
So there's going to be a massive squeeze on the voluntary sector?
Well, maybe, maybe not. I mean, clearly, the reason why is that if we look at previous recessions, and the obvious one parallel would be the one in the early 1980s, that's when the Manpower Services Commission became actually a major funder for the voluntary sector because youth unemployment became such a serious issue. Now, if both major political parties, but in fact a complete political consensus, is to support the voluntary sector. The issue really is what role the voluntary sector will play in that and what resources it will get.
Because if anything, the voluntary sector is needed more now than in the boom times.
Oh yes, I mean it's a double whammy. I mean, as many have described it, in terms that it's the most vulnerable who the voluntary sector deals with, and yet at the same time it will have its resources, which have been this major powerhouse of funding from the government, cut back. So the challenges are going to be threefold. The first challenge is going to be obviously with those cutbacks, there will obviously be an issue about value for money. So the voluntary sector is going to not just demonstrate passion, it's also going to have to demonstrate managerial efficiency and economy. The second one's going to be around its searching, if you like, for new sources of finance, and particularly around maybe philanthropy and dividing that. And I'll come back to some work I've done on that in a minute. And then the third area is obviously going to be around seeking opportunities. As government obviously will deal, as it makes cutbacks, it will also have to deal with maybe serious issues like youth and graduate unemployment, which I think will be the key issue. You
mention new sources of finance because your research suggests that it's possible for the third sector to access another £74 billion. How can that be possible in this financial climate?
Well, the two things on that. First of all, the research you mentioned was a paper that I produced for the Centre for Policy Studies. And what that paper looked at was what was holding back, some minor reforms that could actually get what we would call affluent individuals giving. One of the interesting things about giving in the UK, but also has been what we would refer to as the U-shaped curve, where you see extremities of giving at both the poor level and at the very rich level. And of course, well-known entrepreneurs like Sir Tom Hunter are well known for their generosity of giving. What this paper looked at was people who had surplus wealth of between £250,000 up to around about £5 million, who could be encouraged to give part of that wealth at a much greater proportion than they currently do. And there's about 620,000 individuals in the UK who have a total net asset worth of around about £740 billion. So what it looked at was how, if we just could leave 10% of that wealth, that's where you get the 74 billion from. So if we could just get 10% of that 620,000 people's wealth, that would give us 74 billion.
But could that really happen, that the richest people would voluntarily give away 10% of their wealth?
Well, it's the richest already do. What I'm trying to say is the super wealthy are already giving at that sort of level. What we're talking about is cascading it down to the affluent wealth. That's 620,000 individuals who have assets in excess of £500,000 over and above their property, pensions and everything else. So the two reforms that I outlined was one which is based on the concept of a remainder trust. It's very similar to a lifetime legacy, but using trust law instead. So the idea here is that somebody, for example, may have a fund, maybe in a SIPS pension fund, a self-employed pension fund or whatever, that they never use, right? Because it would be subject to quite high levels of taxation. And what this proposes instead is that they could lend the money to a charity, right? The remainder trust concept, because the biggest worry that anybody who is affluently wealthy has is they've spent their lives making that money, and there's always a fear that you're going to end up in your final years in penury and poverty. Therefore, giving away money, and the most popular way individuals give away money is at point of death, through legacy. So what this reform does is it brings forward by 15, 20 years that gift. So instead of being given at the point of death, you're effectively allowing a charity to use that money now, to gear in that money now, right? But at certain points, certain anniversary points, you will be given that money back if you so desire. The second reform I outlined was personal charitable trusts. Quite rightly, what's driven and why the UK has the best form of charity regulation in the world has been its policy on transparency and accountability. But of course that's primarily been focused on fundraising charities, ones that raise money from the public. The detriment to that very good regulatory model has been what we don't see in the States, which we don't see in Canada, where they have the concept of a private charitable trust. And this is where instead an individual can create a charitable trust, but instead of having to comply with the full remit of regulation that currently charities have to do, these people would be subject to a very light touch regime, and instead would be required to, as they do in the United States and in Canada, to give away 3.5% of the capital each year. And that actually, I think, would be, from all the research I've done with IFAs, independent financial advisors, I've spoken to wealth managers, I've done about 20 conferences over the last year talking to IFAs and wealth managers about this, and they've all said that their clients would be particularly interested in such a structure. Because the major concern is that unlike Sir Tom Hunter and others who don't mind publicity, most wealthy people actually want to give quietly and anonymously.
The only thing is, people say they want to give their money away, but actually when it comes down to it, do you really think it would happen?
Yes, the UK, despite a history of a welfare state at high levels of taxation, over the last 20 years, the UK has emerged as the second most generous givers in the world, after the United States. So I think there is potential there. I speak to a lot of wealthy people. There is the desire to give. You saw with the recent Haiti request, the UK was extremely generous. I think there's an understanding of people's roles in society. There's an understanding of wanting to support charitable causes of a widest possible kind. Remember, amateur sport now is a charitable purpose, among others. So is the armed forces. We think about Help to Heroes, for example, and examples of those young men and young women and the support they need as they reintegrate into society. People will want to support such activities.
And that was Professor Paul Palmer from Cass Business School. We now have a Cass Talks blog, the address alexritson.com.